All right, buckle up, Bitcoin Bulletin fam. The crypto universe is spinning faster than a confirmation block, and you need to be in the loop. We've got seismic shifts happening, market forces playing out like a blockbuster trailer, and innovations that are straight-up mind-bending. Get ready, because you're about to get the unmissable, need-to-know updates that are shaping the future, right here, right now. First up, we're diving deep into a game-changing upgrade that's giving Bitcoin a serious brain boost, bringing capabilities we only dreamed of to the OG crypto. Then, we're dissecting the latest price action as Bitcoin fights to reclaim a massive psychological level. But is the market truly out of the woods, or is this just a temporary breather? We'll break down the signals that matter most. Next, we're looking at how traditional safe havens are soaring, and what that means for Bitcoin's identity crisis. Is it digital gold or something else entirely? The divergence is stark, and the implications are huge. And finally, we're tracking the big money, with whispers of institutional whales making a surprising pivot, shifting fortunes from one titan to another. What does this mean for your portfolio? Stick around to find out everything you need to know. Don't go anywhere, you're watching the Bitcoin Bulletin. Bitcoin gets Ethereum's brain, no bridges needed. Prepare for a seismic shift in the world of digital assets as the BRC-20 token standard, native to Bitcoin's base layer, unveils its monumental BRC-20 upgrade. This isn't just an iteration, it's a revolution, integrating the Ethereum virtual machine, EVM, directly into Bitcoin's core indexer. What does this mean for you? It unlocks the power of Ethereum-style smart contracts on Bitcoin itself, completely bypassing the need for any bridges or third-party intermediaries. Imagine deploying complex decentralized applications and sophisticated financial instruments directly onto the most secure blockchain in existence, all without the usual complexities and potential vulnerabilities of cross-chain bridges. This groundbreaking development was spearheaded by Best in Slot, a pivotal player in the Ordinals ecosystem, in close collaboration with the original creator of BRC-20, Domo, and the Layer 1 Foundation. They've effectively transformed Bitcoin's indexers from simple data processors into fully Turing-complete systems, a leap that imbues Bitcoin with unprecedented programmability while retaining its unparalleled security. Since its inception in early 2023, the BRC-20 standard has already facilitated over $3 billion in trades, proving its robust utility even without venture capital or institutional backing. Astonishingly, in the last 6 months alone, BRC-20 has processed a staggering $633 million in on-chain volume, outperforming rivals like Runes and traditional ordinals. This EVM integration isn't just about enabling new features, it's about fundamentally expanding Bitcoin's role beyond a mere store of value. It's paving the way for a new era of decentralized finance, DeFi, and modular applications built directly on Bitcoin's foundation, setting the stage to challenge existing token standards and redefine the landscape of programmable money. The community is buzzing with the potential for a new wave of innovation and utility for Bitcoin-based assets. But as Bitcoin gains new capabilities, how is its price holding up against the broader market sentiment? Stay tuned as we break down the critical levels to watch. Bitcoin reclaims $110K, but BTC market remains fragile, analysis says. Bitcoin has staged a significant comeback, reclaiming the crucial $110,000 mark, a move that has injected a dose of optimism into the market. However, seasoned analysts are sounding a note of caution, suggesting that despite this recovery, the underlying market structure remains surprisingly fragile. Data from Glassnode indicates a noticeable dip in spot trading volume over the past week, falling to $7.7 billion from $8.5 billion, a 9% decrease. This decline in volume is interpreted as a signal of waning investor participation and, crucially, weaker conviction among traders. While the cumulative volume delta, CVD, shows a slight improvement, hinting at easing selling pressure, the overall spot metrics paint a picture of demand that is not yet robust enough to signal a full recovery. The futures market mirrors this cautious sentiment. Open interest has seen a moderate decrease, dropping from $45.8 billion to $45 billion, suggesting a degree of position unwinding and a tilt towards risk-off behavior. Traders appear less eager to leverage their positions following the recent downturn from all-time highs. Furthermore, futures funding rates have also declined, indicating reduced demand for long exposure and a reluctance to pay higher premiums. This cautious positioning is further underscored by reports of institutional investors stepping back, with demand reportedly hitting its lowest point since early April. Technically, Bitcoin bounced off the lower boundary of a descending parallel channel at $107,300, pushing towards the upper boundary around $110,500. A sustained daily close above this resistance level is critical to signal a potential breakout from the current downtrend. The next significant hurdle lies within the $110,000 liquidity zone, which also contains the 50-day and 100-day simple moving averages. Bulls must conquer this area to bolster chances of a recovery towards new all-time highs. On the downside, immediate support is found at the channel's middle boundary of $108,000 and Monday's low of $107,300. A break below the channel's lower boundary at $105,300 could trigger a sharp decline, potentially testing the key support level at $100,000. Analysts like Michael Van de Poppe emphasize that a clear break above $112,000 is essential for Bitcoin to reach new all-time highs. Otherwise, a dip towards $103,000 might present a significant buying opportunity. Liquidity maps highlight key areas of interest around $110,000, $111,000, $000 on the upside, and $105,500, $107,000 on the downside, which often act as reversal zones or magnets for price action. The immediate need for Bitcoin is to reclaim the 20-day EMA at $112,500. Failure to do so significantly increases the probability of further drops. While Bitcoin navigates these technical levels, a major global safe haven asset is making headlines with record-breaking surges. What does this mean for Bitcoin's narrative? Gold's safe haven surge exposes Bitcoin's split identity. In a dramatic display of market dynamics, gold has surged to a new all-time high, hitting an astonishing $3,485 per ounce. This remarkable ascent was significantly fueled by comments from U.S. President Donald Trump, who emphasized a deflationary outlook for the U.S. economy, sending ripples of uncertainty through global markets and boosting demand for traditional safe haven assets. Concurrently, Bitcoin experienced a sharp divergence, falling 13% from its mid-August peak to a two-month low of $107,290. This contrasting performance starkly illustrates Bitcoin's complex and often contradictory market identity, as described by IG market analyst Tony Sycamore. He explains that Bitcoin often finds itself in a precarious position, acting as both a perceived store of value, akin to gold, and a high-risk asset, similar to tech stocks, depending entirely on prevailing market conditions. This dual nature has recently led to a breakdown in the strong correlation that previously existed between Bitcoin and gold over the past 2.5 years. Vince Yang, co-founder of zk-Link, further elaborated on this divergence, noting that the correlation between the two assets has been weak, and at times even negative, throughout the current year. He attributes this to gold's entrenched role as a stable, safe haven asset versus Bitcoin's heightened sensitivity to liquidity shifts and overall market risk appetite. This suggests that within a diversified investment portfolio, Bitcoin and gold might increasingly function as counterbalancing forces rather than D-stroke-letter 1ED3NG Han assets. Despite this short-term divergence, some market observers believe that historical patterns could predict a future realignment. Analysts like Joe Consorti point to a historical lag of 150 days, where Bitcoin has tended to follow gold's directional trends. If this pattern holds true, the current rally in gold could potentially foreshadow an upward trend for Bitcoin in the coming months, though this remains a speculative outlook, contingent on evolving macroeconomic factors. The current scenario highlights a critical juncture for Bitcoin. As traditional safe havens like gold show robust performance driven by economic uncertainty, Bitcoin's ability to solidify its digital gold narrative will be heavily tested, especially as it grapples with its identity as a risk-on asset. While gold's safe haven status shines, where is the institutional, smart money flowing? We're tracking a potential whale migration that could reshape the market. Institutional whales quietly shifting fortune from Bitcoin to Ethereum. Evidence is mounting that significant institutional capital, often referred to as whales, may be quietly reallocating their assets, moving substantial sums from Bitcoin to Ethereum. This trend is unfolding against a backdrop where Bitcoin exchange-traded products, ETPs, have amassed an impressive 1.47 million BTC, representing roughly 7% of the total supply. Leading this accumulation are major U.S. funds, notably BlackRock's iShares Bitcoin Trust ETF, IBIT, with 746,810 BTC, and Fidelity's Wise Origin Bitcoin Fund, FBTC, holding close to 199,500 BTC. Global Bitcoin ETPs collectively added over 170,000 BTC, valued at approximately $18.7 billion in 2025 alone. However, recent data from August indicates a cooling of this momentum, with global Bitcoin ETPs experiencing net outflows totaling $301 million. In stark contrast, Ethereum funds saw inflows of $3.95 billion during the same period, highlighting a clear shift in investor preference. This pivot is further exemplified by whale activity, where a single large holder reportedly sold 4,000 BTC for nearly 97,000 ETH, significantly increasing their Ethereum holdings to an estimated $3.8 billion. Arkham Intelligence data reveals that 9 such whales collectively rotated $456 million from Bitcoin to Ethereum, signaling a strategic move to potentially lock in profits from Bitcoin's ascent and reallocate capital to capitalize on Ethereum's perceived opportunities. This shift in capital allocation occurs as the U.S. Securities and Exchange Commission, SEC, is actively reviewing 92 cryptocurrency-related ETF applications, with decisions on many expected by October, a development that could significantly alter market dynamics. Analysts are closely watching these regulatory developments alongside macroeconomic indicators. While some projections, like those from Plancy, suggest a long-term path for Bitcoin towards $1 million over 7 years, others, like David Bailey, CEO of Nakamoto, anticipate Bitcoin reaching $150,000 once whale selling pressure subsides. However, the current trend of whales moving capital to Ethereum suggests a short to medium-term preference for the latter, possibly driven by upcoming developments or a belief in Ethereum's ecosystem growth, compared to Bitcoin's current price action and perceived overvaluation by some large holders. This rotation signals a maturing market where capital is actively seeking the next significant growth opportunities, potentially impacting Bitcoin's dominance and Ethereum's market position. We've covered massive upgrades, price action, market narratives, and capital flows. Now, let's get a quick recap of the biggest stories and what you need to do next. And that's a wrap on another action-packed Bitcoin Bulletin. We saw Bitcoin's BRC-20 upgrade bring EVM smart contracts directly to the base layer, potentially revolutionizing its capabilities. Then, Bitcoin reclaimed $110K, but the market remains fragile, demanding close attention to key support and resistance levels. We also witnessed gold hitting new highs, exposing Bitcoin's struggle to maintain a consistent, digital gold narrative amid its risk-on asset behavior. Finally, institutional whales are reportedly shifting significant capital from Bitcoin to Ethereum, signaling a potential change in market leadership. Don't miss a single beat in this fast-moving market. Hit that like button if you found this update valuable, subscribe to the Bitcoin Bulletin for all your crypto news, and smash that notification bell so you never miss an update. Ring it! Also, let us know your thoughts in the comments below, and make sure to follow us on all our social channels for real-time insights. Stay informed, stay ahead, and we'll see you in the next one.